Welcome aboard, traders, to a new session of charting across the board. Today, we'll take a look at the price action on the S&P 500, the Nasdaq, as well as Bitcoin. I hope each one of you are doing great. Today is Wednesday, July 30th. We have a loaded information based on the economic calendar. We have the GDP numbers this morning. At 2 p.m., we have the decision for the FOMC meeting. It will be an interesting day that potentially will bring some volatility across the market. Many of you may be wondering, Marvel, what happened? Why are you talking about futures market all the time? Or mainly, why are you shifting your attention towards the futures market? Mainly due to the regulatory framework. These are regulated markets by the largest future exchanges in the world, the CME group. Mainly, okay? We're not promoting any offshore exchanges that are located in any unknown island, okay? So therefore, we like to trade either futures, whether that being indices or cryptocurrencies. The CME group is also now providing cryptocurrencies. We have Bitcoin, Ethereum, Solana, and XRP so far, okay? So we can all trade regulated markets in a risk-responsibly manner, okay? Which, by the way, none of the content presented here on the stream represent, you guys already know, none of these represent any financial advice. Disclaimer, okay? All of these are interpretation of the market information for educational as well as informational purposes only, unless, of course, one is an advisor, a financial advisor that is working in that field. What we do here are not in that interest. Also, the other reason, besides being regulated markets, the other reason, as you guys know, is due to the research of the titans of the past, the market technicians, the father of technical analysis, Charles Dow, the father of the Garley pattern, Harold M. Garley, W.D. Gann, Jesse Livermore, Richard Wyckoff, among other greatest technicians of the past, where, if we connect the dots, the futures market started in the 1920s. And these technicians were also trading commodities back then. So therefore, we're trying to teach, or we try to teach what we preach, right? We're not trying to promote something out of the context, but rather following the same technical readings that these technicians of the past were trading back then. That is the main reason why, besides, of course, liquidity, okay, and interest within the institutions. I only wanted to give this comment so you guys understand why my focus on the futures market, on regulated instruments, okay? We have cryptos within the CME. We have, of course, the major indices, commodities, along other trading vehicles, okay? Mainly, that is the main reason. Today, we have a report on the GDP numbers. Okay, I wanted to also make a brief comment on these news. Why? Because I presented my projection on the interest rate. There's also within this category that includes GDP numbers, the labor force for employment or unemployment, as well as inflation. We have done a work previously, and speaking of GDP numbers, we had the previous quarter a negative GDP, where the projection ideally for a technical recession will be 2 consecutive negative GDPs. That hasn't been the case with the current information. Now, the question is, are the numbers real or not? We do not know. This is where I like the comment from the Treasury Secretary, Scott Bessent, that he made. You guys know he was a former hedge fund manager prior to being in office now. And his comment recently really caught my attention, that he made a career by trading the market and not listening to economists. Very powerful statement, which I agree. We must listen to the markets mainly. Okay. So now jumping briefly into a topic that will be expected for later at 2 p.m. We'll have the decision whether or not the Fed will cut interest rates. For this topic, I would like to present a chart from 2023 very briefly before we jump into the technicals for the S&P, the Nasdaq, and Bitcoin. Okay, here you guys can observe a sine waves that represent the cyclical rhythm, the highs, okay, the highs, the lows, the highs, the lows, and so forth, that date all the way from the 1950s. My argument back in 2023 was that the interest rate were reaching the periods of risk, or the highest level within the interest rate. Back then it was at 5.25, and the readings that I presented before was that if the same readings from the 1950 following this cyclical rhythm was going to repeat in a similar manner as the periods of pause that we observed here in 2006, 2007, prior cutting the rate, as you guys can observe, the decline represented the rate cuts back then. So therefore, these were the data points back then at 5.25. I believe the highest point was 5.50 prior to experience this pause that took nearly a year, from June 2023 all the way to August and the beginning of September of last year, prior to the first rate cut. And since then, it has been on a pause after the major pause that took nearly over a year. Okay, so now this is a chart from July 16 of 2023. If we jump into the current information, the current data points, and we can observe that if these data points were indeed respected or not. We jump into the Fed funds once again, or the interest rate for the Federal Reserve. We have indeed encountered that period of flatness. If you guys recall, the recession callers back then, 2022 and 2023, was at those levels, right? Our argument, or my argument, however, was that if the same, once again, cyclical rhythm was to be respected, maybe the period of turbulences was going to be expected for what I call the periods of risk of 2025 to 2026. What did we experience in 2025? The major turbulence early this year. Now, is a recession going to be here? We don't have to know. What I'm trying to foster is to trade the market mainly. We can, of course, read these data points, but are we making profits out of reading these data points? Or we're actually making profits, as Scott Bessent suggests, that he made a fortune or a career by trading the market? My goal is to trade what the market is telling us. It has been my goal for the past few years, and it won't change. But from here, from time to time, I like to also present other readings, other data points within the GDP, the inflation rate that we also presented previously, on and on. And this is what we have so far. The period of flatness, correct, projected back then, occurred already without cutting rate, where all the recession callers back then, over 2 years, 3 years ago, were already at those levels. However, we did a study suggesting that if this cyclical rhythm were going to be the case, another repeated case, we also observed that during those previous cuts, there were also periods of turbulences, except during the 1990s, I believe, where the Federal Reserve started cutting rates. However, the market keep rallying. Which one will be? Nobody knows. That is the beauty of the market. We can argue it's going to do this or that, but let's trade what we see. Anyways, I wanted to get that out of the way, suggesting that it has been the case on the interest rate numbers. We have the period of flatness. There was no data points here, okay, from June 2023. We expected a period of flatness indeed occurred prior to the first cut that occurred also in September of last year. So therefore, since then, we did not have any new information. Now the question is, are we going to respect this cyclical rhythm? Are interest rates going to decline to the cycle low up until 2027? That will be early next year, or in 2 years, almost a year and a half at this point, before start rising again. Please know that this amplitude and length does not represent the levels, the low levels here, okay? It doesn't mean it will be a 1%, only portraying, illustrating the lows, okay? Cycle lows and cycle highs that so far over 2.5 years, it has, or 2 years in this case for this chart, has been respected, okay? Now, let's jump into the price action for the S&P 500 or Bitcoin. We can start with Bitcoin briefly before jumping into the S&P or the NASDAQ, okay? On BTC, also, this is a chart based on micro futures. The ticker is the MBT, also listed where on the CME group, okay? Previously, if you guys recall, we have this major bearish structure, a W formation, a deep grab pattern with its complementary ratio at the 1.90, where prices have been ranging since then, okay? This chart is based on the 4-hour time frame. There hasn't been much information other than turbulences and a range, okay? The range, you guys can observe whether this will be an accumulation or distribution. That is up to the interpretation of these readings, okay? We have indeed a trading range so far. This is on, once again, on the micro futures, okay? However, if we jump into the spot market here, we can also observe now this information. Before I confuse anyone, this W formation is based on the 4-hour. What occurred there, the PRC was tested, peer through slightly higher over spill, okay? Then a decline prior to forming this trading range, a new trading range on this particular time interval, the 4-hour. Now, what we have here in this range, the segment of the move, is based on the hourly time frame. So I'm trying to zoom in within this range to know what is going on at those levels, okay? So now jumping into the hourly time frame, I can observe, I believe we already presented this information during the last stream, where a bullish butterfly, the completion point within the 114 region, was printed prior to bouncing back and printing also another W formation, also presented during the last stream. Also, we were following the new readings on this segment of the move, where we have the lows to the highs, where the common areas of retracement for the 0.382, the 0.50, and the 0.618 were the targets for this W formation. So therefore, on the 4-hour time frame, no major changes based on this trading range. If we zoom into this range, we can observe the same choppy action. Now, new information here. We have a down sloping price contraction, or a descending channel in this case, where we recently pierced through on the hourly. An hour ago, I can observe this previous hourly candle pierced above the upper trend line, the supply zone of this downsloping channel. Now, are we back testing as support? That's a major question. We will see. Can we go higher? Nobody knows, but we'll like to see the reaction at 2 p.m. later today, okay? However, new information. That can be indeed a new support levels before trying to either retest either of these previous highs, 119, and of course the major resistance at 120. If we zoom into the 4 hour, those are the same arguments, okay? This is a major W formation. Now, the bigger question that many may ask is that if we're heading higher, okay, the question remains whether or not these previous highs at 109, 111 will be the next major support in the event of further downward pressure, okay? If this turns to be another trading range before heading into those lows at 111 or 110, depending on the market generated information, okay? As of now, this is all the readings we have. On the 4 hour after the completion point of this W formation, prices have been only ranging. Where also, if we bring the timing factor, the next focus for the main intersection between price and time remains for August the 5th, okay? And of course, the following will be August 19th with two major focus afterwards, September and October, okay? Those are key months within the major turning points for the market, okay? Now, I hope this is clear. There is not much information within this range, at least on the 4 hour or the daily even, other than a range, the choppy action as of now on the hourly and the 4 hour. Therefore, it might be extremely hard to trade, right? This range, if you are long, then you are back to your lows, unless of course you're taking profit in and out like a nightclub in Amsterdam. Now, moving into the price action for the S&P, let's pay attention here on Bitcoin, because all we have seen so far has been pretty much a choppy action since the completion point of this W formation on the hourly also, okay? This continues to be a lower high than the previous high. So therefore, I'm going to move my alarm here. I have initially plotted at 120. Why 120 and why 116? Because to me, within this range, it will be only a choppy action. Therefore, I'm not much interested in trading this range, okay? But however, speaking of trading, I've been trading the S&P, where it's been pretty fun, I would say, day trading the S&P futures. But I posted yesterday a comment that day trading can be addictive, but when we start breaking our rules, our interpretation of the technicals, then it becomes gambling. And this is what we're trying to avoid: gambling versus trading and taking this as a serious business. Okay, this is not gambling. This is not what we want to portray for others who watch our work. Okay, but our readings. So now moving into the S&P 500, I want to present, I already presented before, a very simple strategy for day traders. It has been working in confluence with my M and W formation for harmonic patterns. However, now based on the orb that many of you potentially are familiar, this is a very simple strategy that creates the first trading range of the opening, in this case, the New Year session. The first 5 minutes of the opening creates a trading range where if prices break above the upper trend line, we have an upward move. Conversely, the opposite is also presented here. However, like many other strategies, the opening range breakout, the orb, is not 100% guarantee that will perform as any technical information isn't 100% accurate, okay? We know this. However, we're trying to manage risk. An example, when I was starting the stream earlier, I wanted to go on a long here, on a short or on a brief long, okay? On this retest, we pierced through, there was a retest, and then prices navigated 7 points, 7.50 points, that equals $50 per point, okay? So nearly $400 here for that move alone on the S&P 500, okay? That would have been, of course, for one contract. Now, this strategy we also mentioned that was created by who? But a hedge fund manager, Toby Crabble, this guy on the left-hand side. Toby Crabble is the founder, chairman, and chief investment officer of Crabble Capital Management. He suggests in his book for the orb strategy that is more likely that the pattern will perform within the first 10 minutes of the trading range. But based on my personal research on this strategy, they do work, but I'm not certainly sure if they necessarily have to perform within the 10 minutes, okay? We can observe here, it's been already over an hour now, 2 hours almost, for or after the New York Open, okay? And prices, yes, indeed, have been only ranging since then, okay? Not much information. However, we understand that there is a major event at 2 p.m. Eastern Time, followed by the press conference at 2:30, where of course we'll have the decision on the interest rate as well as the outlook for the economy, okay? Therefore, I mentioned before that regardless of taking trades on minor time frames, long, short, in and out, this doesn't change the major readings that we have on the daily time frame. Now, jumping to the NASDAQ. Why the NASDAQ? Because these two indices, the S&P 500 as well as the NASDAQ, they present similar readings, okay? It's the same chart if you look from left to right, okay? So now jumping into the NASDAQ on the daily time frame, okay? Keep in mind that the same readings that the NASDAQ present on the daily is basically the same readings on the S&P 500. Now, another comment I heard earlier or the past few days is that if you were in the market, if you fell asleep in the market during this December, okay, and you woke up today, you're basically 2.61% from those highs, okay? Which, indeed, if you woke up now and you did not leave the market during this major turning point, nearly let's see what the NASDAQ printed here from that favorite pivot point. That was a major turning point, 27%, okay? I've been noticing in the space that many are trying to call that their targets were reached after a certain time. However, what happened here, my friend? That is, as one would say, dead wrong, correct? But again, the point here is not to be right or wrong. Of course, we want to be on the right side of the move when in trading positions. Now, let's talk about the technicals, okay? Here, what you guys can observe is a W formation, a bearish structure that possesses a turning point at the Fibonacci retracement from the highs to the lows. The completion point of this harmonic structure is first presented at the 0.886 within the 22,000 points, okay? This is the bearish bad PRZ, the potential reversal zone, where there was indeed nearly 3.52% decline, only a turbulence or a pause, a harmonic pause, prior to breaking higher and testing the 1.13 from the lows or the highs to the lows. This Fib extension, this Fibonacci extension at the 1.13 is known as the hub level for this particular bad pattern, meaning this will be ideally the main turning point if this harmonic structure is to be respected. Okay, if it goes any higher, we know that this mutates into a crab for the 1.618. Okay, however, we're moving accordingly based on each of retracements and extensions. Since the 1.13 is being the first Fibonacci extension that we're testing, this will give us indeed the real statement of the market. Okay, the idea also in a similar manner as Bitcoin will be if prices retest previous highs, okay, within the market structure from December and indeed holding as support, then we will see if this is indeed a B-shape recovery as many are expecting, okay, which is absolutely fine. If that's the case, we trade in the same directional trend, okay, without challenging the trend. But as of now, we are also noticing here a rising wedge. These type of formations are also suggesting or implying that the trend may change soon. However, they can also break upwards in bullish conditions, okay? We do not know which direction will break yet, okay? But if we add other technical readings such as the RSI, we can observe that we are indeed within overvalue conditions on the daily. So there hasn't been much of a move towards the upside after, of course, following the major decline that has not presented any significant drawdown as of now. No major turning points yet in the price action for the Nasdaq. Will August be the time? We have a time window also for August. That may be the case if this were to occur, okay? So once again, so far, technical readings, if once again, the bulls are going to indeed demonstrate that this is a B-shaped recovery, then they must jump at these levels if there is a retest of previous structure resistance that potentially may act as support. We will see. However, important to know also that any correction between 5 to 10% will then dictate if this is only a correction before the resumption of the new trend, if true support levels are indeed found on the upcoming correction, if there were to be one that present a severe decline, okay, between 5 and 10%. We will see, my friends, okay? Now, speaking of the 1.13 Fib extensions, okay, one of the reasons or intriguing factors here, if we look at the 1.13 throughout history, we talk about this Fibonacci extension nearly 3 or 2 years ago, presenting those arguments back then, where my technical readings or my research was that throughout history, the 1.13 should be also carefully addressed. Note here that on the chart for the S&P, this is only a reading based on trading view, okay? This is not the data feeds from the CME. Therefore, the 1.13 is below on the CME data feed, okay? However, I'm choosing here the chart. We can also use the cash flow or the cash market on the CBOE, okay? Chicago Board of, what was the E? Exchange? Chicago Board of Options Exchange. If we go here into the S&P chart once again, I'm going to present here why the 1.13 should be carefully addressed, okay? Looking left, market leave clues. There has been cases, okay, severe cases, where prices tend to test the 1.13 extension, okay, such as this level here, before breaking lower. I'm gonna unlock or disable my magnet. You guys can observe here, are we here in the market, or we are indeed somewhere at the V-shaped recovery? Some of them are expecting a similar reading as the COVID crash, okay? Right here, 2020. If we anchor once again, I'm going to present the readings, a video on this tip extension that I found from 2 years ago, when we were at the previous room, where the same technical readings were presented that the 1.13, either towards the upside or towards the downside, should be carefully addressed. Now, in the context of a V-shaped recovery, are we now at these levels on the S&P 500 where we're testing the 1.13 before retesting the 0.886 as support and continuing the upward traction? If that were to be the case, we can observe here that the S&P 500 from the previous high back in the September of 2020 indeed created a decline of nearly 10%, precisely 10%, for finding true support levels and resumption of the trend up until November 2021. Everyone, I'm having some issues on the microphone. I believe I need to charge my laptop here, but I'm going to leave this for the next stream, okay? The 1.13. There's a video that I have from 2023, I believe, where we're discussing the status of the market back then, where the sentiment by the other members from the previous room were calling for major drawdown. However, I presented the levels at these lows, suggesting that we should first see the support levels prior to the major ABCD that we have achieved after almost 2 years, okay? Or nearly 3 years now. This one, the major one. So all of this information will be presented next, and I would like to emphasize the readings on the 1.13. This chart, by the way, on the weekly time frame, I can observe so far maybe a dark cloud cover. Of course, there's 2 more days before the session concludes. Today can be a volatile day. We can go higher, lower, we will see. But important to know the readings, that the new information is presenting constantly. Everyone, I'll see you guys on the next one. And remember to live a life of attitude, or to live a life with an attitude of gratitude. I apologize, my microphone in the background is triggering the interpretation of my readings. I'll see you guys on the next one. Cheers.